Planet, would I mind putting up some of this stuff to show this, because it was a couple of members on the Trader Planet site were really impressed by it, and they said they would love to see it in the presentation. So of course I don't mind showing that, because I don't always necessarily go back. I talk about different things, but to actually apply, you know, what actually happened this week in a dollar figure to it is pretty interesting. And again, it's based on the predictability and based on what's going to happen, not something that's already happened. You know, there's a number of different programs out there. Different things will try and promote a product or their own services by saying, well, look, if you had done this when I told you to do this, this is what would have happened. Well, no, this is what we've said is going to happen this week, and this is exactly what did happen. So that is kind of neat. So with that said, I thought I would bring that up and share that with everybody, just looking at some of the positions we took this week. So let's now go in and start our presentation for the week of June the 1st. Now again, we've got a holiday short week here. There's going to be some volatility. So let's start our presentation again where we always do, with the US dollar index. Now, looking at the US dollar index here, couple of things concern me. We've got the predicted MACD has crossed over the trigger. It's actually trying to cross to the upside. It can't. It's bounced off the trigger and is starting to move lower. The predicted true strength indicator from Vantage Point, another very powerful leading indicator that I've just showed in those other 4 trades, has crossed over to the downside, and it looks like it's getting ready to move. So with that, what we'll do is we'll pull up the other crossovers and see what's happening in the short and the medium term here on the US dollar index, because it's going to play a big part. So we can see that the short term is basically flat. So with a flat signal like that, the bias is still to the upside. Looking at the medium term, we still don't have a crossover to the downside, and the long term obviously is still going to be showing strength again to the US dollar, which we have. So what we're going to do is we're going to put this back up to our triple EMA, pull this down, and have a look at the other indicators. Now we're coming down off of this overbought territory. We're approaching the zero line, but again, even though we don't have our crossovers, much like those other positions I had put out, the predicted MACD and the predicted true strength indicator from Vantage Point can be a leading indicator to tell us that this is beginning to soften. Now we've closed the week at 86.58. Our key level of support, 85.60. Based on these 2 indicators here, I have a slight downside bias on the US dollar index, but again, we'll have to see how this plays out. We're going to have very thin trading on Monday, and we always want to be very cautious when we see that. So again, we're going to be watching it very closely, but for now, the US dollar index is holding in that buy formation, but our other leading indicators from Vantage Point are starting to roll over, suggesting that a move to the downside on the US dollar index is definitely coming. So we'll be watching very closely on that one. Now, what I want to do here is go in and have a quick look at the equity markets. Now, the equity markets right now, so everybody is aware, the equities are 100% driving a number of different currencies. They're driving the Canadian dollar, the euro, all of these currencies are being affected by I'm going to say equities. I'm using the S&P 500 as an example, but the reality is that can be gauged to a number of different equities. So looking at this, we can see here that we're coming out of the oversold territory. The predicted medium and long-term differences are in the oversold territory, and they're starting to move higher. This indicator right here from Vantage Point, the predicted true strength indicator, is heavily oversold, and it's getting ready to make that cross. When it crosses in an area like this is when this indicator is its most powerful on a trend reversal. So I'm going to pull this up so everyone can see here. We're going to go in, have a look at that short-term crossover and see if it's going to get ready to cross. Well, we can see it already is crossing over, which is a good sign. Now, the medium term, I'm not positive is going to support that, but in the meantime, which it does not, we can see here. So we're going to be looking at that short-term crossover, and again, the predicted true strength indicator from Vantage Point and the predicted MACD are both suggesting we could be getting ready for a move to a reversal here. So again, with this indicator in such heavily oversold territory, it's, in my opinion, the equities, the downside to the equities is going to be limited. Whether it's corrective or not will have to be left to be seen, but I'm suggesting that to start the week, those equities are going to come under, they're not going to come under further pressure until probably Tuesday or Wednesday, and we'll be looking at a corrective move. Now, very important to point out the close here, 1088, our major level, 111260. A sustained break, 111260, will take the pressure off the downside, and we should start moving higher, consistently higher on the equities. But again, the triple EMA is still showing that this is going down, but the short term, these other indicators suggest it's going higher. Now, looking at our gold contracts, gold, again, I had talked about this week that it's volatile, it's still volatile, but a very good call here again from Vantage Point. Refused to put out that sell signal, even though the 3-day crossed over the 8 and the 18-day predicted moving average. That was not sustainable. You can see right here, the 8-day bounced off of that and continued to move higher. Now, if we look at seasonal patterns, it was about this time last year when essentially gold and the US dollar were moving higher together. The gold contracts continued to move higher, and then the US dollar completely tanked for the rest of the year. That was a pretty vicious move. Now, we're also getting very high in that US dollar index. When we start pushing towards that $88, $89 range in the US dollar index, there is going to be a tremendous amount of sellers come into the market. So definitely we want to keep an eye on that. So with that said, let's go in here now, and we'll go in and look at some of the main currencies and some of the currency futures contracts. Now, looking at the Euro futures contract, we are in oversold territory. There's a couple of things that are concerning me here. This is why I'm suggesting the US dollar could get a little softer. On the Euro FX futures contracts, I know that every analyst out there is saying that the Euro is going to 115, it's going to par, all of that. So, but again, much like those trades that we had put out and we had reviewed and the profit on those trades, the Vantage Point software is saying something else. So what it's saying to me right now, we've got this crossover on the predicted true strength indicator in heavily oversold territory. We have plenty of room to extend here all the way up into this area. Predicted MACD is also crossing over to the upside. This suggests that the Euro FX futures contracts are going to see a relief rally and potentially a trend reversal. So we have to keep this into consideration, because again, the more the market thinks it's going in one direction, the more likely it's actually going in the other. So, and